Hello, I'm Cole McDaniel. This is for my CAPSIM presentation. Okay, so today in our CAPSIM presentation, we're going to be looking at the many topics, how it portrays the group project. We're going to look into the strategies we use for the CAPSIM company simulation. We're going to look at the ratios for the financial statements. We're going to break down financial statements of the income statement, the balance sheet, the cash flow statement, and the data with all the data from my group's company. I'll also list the financial ratios, and we'll be examining how the ratio will affect the simulation company's financial viability. And I'll go over what I learned from the class and project overall. Now, looking into the strategy summary. Our strategy throughout the CAPSIM was to create products and sell them with good marketing profits, as most companies do. We decided to go for 3 different products, but we found out that candy itself was not making any profit and it was costing us thousands of dollars to produce and advertise. So cookies were in the middle with that. They made profit, but also were costing money. Nothing made as much as cake. Cake was our golden product, and it kept our company alive after we went into massive debt. Now, the reason we went into massive debt was because of miscommunication on the product of candy. One of our teammates decided to produce a lot of candy, despite the fact that candy was only making us lose money without gaining any profit whatsoever. And so with that, we dropped into debt so bad that it offered a financial loan to us with a 10% interest rate. And so we had to get out of major debt. So what we did, we stopped the production of candy, lowered the production of cookies, and we stopped marketing candy and cut down on the marketing of cookies. And we increased production and marketing of cake as it was making the most money. After we did that, we were able to pay off our debt and finish our thing with a positive balance. It's kept us from filing for bankruptcy, obviously. Now, we're going to look into the ratio and financial statements of it. So our data can break into 3 different financial statements. Our balance sheet, the cash flow statement, and the income statement. We're going to start the income statement. We started with sales. In sales, we had 41,590 in cake sales, 16,740 in cookie sales, and 17,328 in candy sales for a grand total of 75,658 in total sales. Now, the income statement we had was variable costs. Our variable costs were broken down into 5 sections: direct labor, direct material, inventory carry, total variable costs, and contribution margin. In direct labor, margin. In direct labor, we had $9,452 for cake, $6,519 for cookies, and $8,678 for candy, for a grand total of $24,649 in direct labor. In direct material, we had $13,079 in cake. We had $5,601 for cookies and $5,087 for candy, for a grand total of $23,767 in direct materials. Now, in inventory carry, we had $0 for cake, $716 for cookies, and $0 for candy, for a grand total of $716 for inventory carry. For the grand total of, in total variable costs, we had $22,531 in cake, $12,835 for cookies, and $13,766 for candy, for a grand total of $49,132 in total variable costs. Lastly, in this section, we have the contribution margin. For the contribution margin, we had $19,059 for cake, and $3,905 for cookies, and $3,562 for candy, for a grand total of $26,526 in contribution margin. The last section of our income statement is our period cost section. The period cost section includes depreciation, SG&A, R&D for promotion, sales, and admin, and the total variable costs and net margin. So for depreciation, we had $1,813 for cake, $167 for cookies, and $167 for candy, for a grand total of $2,147 in depreciation. Now for SGA R&D promotion, we had $2,000 for cake, $1,200 for cookies, and $1,000 for candy, for a grand total of $4,200 in our SGA promotion, R&D promotion. For SGA R&D sales, we had 2,000 cake, 1,200 for cookies, and 1,000 for 1,200 for cookies and 1,000 for candy, for a grand total of $4,200 in SGA R&D sales. For SGA R&D admin, we had $644 in cake, $259 in cookies, and $269 in candy, for a grand total of $1,172 in SGA R&D admin. For total period costs, we had 6,000 and sorry, I lost. Sorry a second. Total period costs, we had 6,458 for cake, 2,826 for cookies, and 2,435 for candy, for a grand total of 17,719 in total period costs. Lastly in this section is net margins. In that we had $12,601 for cake, $1,076 for cookies, and $1,127 for candy, for a grand total of $14,807 in net margins. Now after that, we're going to get into the net profit, in which we take the net margin and subtract it from the EBIT, the interest, the taxes, and the profit sharing. Our EBIT was 14,807. Our interest was 1,538. And our taxes was 4,644. Lastly, our profit sharing was 172. Oh, sorry, 172. My bad. After subtracting these numbers from our net margin, our company had a net profit of $8,452. Now remember, each number is worth 1,000. That is 8,452 thousandths, which equals $8,452,000 in total net margin. That's pretty good. Now we're looking at the balance sheet. In the balance sheet, we have two different categories: the assets and liabilities / owner's equity. Now, in the asset section, it's made up of 8 different categories of cash, accounts receivable, inventories, total current assets, plant and equipment, accumulated depreciation, total fixed assets, and total assets. Now, we'll start with our current asset of cash. We had current assets, which consists of cash, accounts receivable, and inventories. So we had $23,577 in cash. We had $6,218 in accounts receivable, and we had $5,965 in inventories, for a grand total of $35,760 in total assets. Next are fixed assets, which consists of plant, equipment, and accumulated depreciation. We had $32,000 in plants and equipment. We had negative $15,520 in accumulated depreciation, for a grand total of $16,680 in total fixed assets. Then when you add those current assets with the total fixed assets, you'll get a grand total of $52,444 in total assets. Now when we look at the liability / owner's equity section of the balance sheet, that's made up of 10 different categories of accounts payable, current borrowing, emergency loan, maturing long-term debt, total liabilities, common stock, retained earnings, total equity, total liabilities, and owner's equity. Now we start with the owner's equity. We start the liability section of this section of it, and we look at the $4,310 in accounts payable, $0 in current borrowing, $0 in emergency loans. We had $2,600 in maturing long-term debt and had $10,400 in long-term debt. Now we add these numbers together to get a grand total of $17,310 in total liability. The next section is equity section, in which we had $10,206 in common stock and $24,923 in retained earnings. Now, when you add those two numbers together, we get a grand total of $35,129 in total equity. So, when we find total equity and total liability, we add those two together to get a grand total of $52,440. Now, didn't we hear that number before? That's because when the assets and when the total liability with the balance sheet, where assets need to equal the liabilities and owner's equity together. And so in total, it should equal 0 when you subtract it from each other. So we know that everything's all good. Now, we're looking lastly at our cash flow statements. Cash flow statement is made up of 3 categories: cash flows from operations, cash flows from investing, and cash flow from financing. Now, cash flow from operations made up of 6 sections of net income, depreciation, write-offs, change in accounts payable, change in inventory, change in accounts receivable, and net cash from operations. Now we had a net income of $8,452. We had a $2,147 in depreciation write-offs. We had negative $20 change in account payable. We had negative $4,016 change in inventory. We had $821 change in accounts receivable. Now, when we add those together, we get a total of $7,384 net cash from operations. In cash flows from investing, we look at the plant improvements. We had $0 in plant improvements, so that means there's $0 in the cash flow from investing. Now we look at the cash flow from financing is made up of 7 sections: dividends paid, sales of common stock, purchase of common stock, increase of long-term debt, retired of long-term debt, and the change in current debt. Now we had $0 in every one of those categories, making the 0 total for cash flow from financing. So we take the original number from the top, what we got from $7,384 net cash from operations, and we add that to our our starting cash position of $16,193 for a closing cash position of $23,577. Now, when we look at the ratios for the company, we had 15 financial ratios total. We had the ROS, turnover, the ROA, the leverage, the ROE, the free cash flow, the working capital, the days of working capital, projected stock prices, market capitalization, book value per share, retained earnings. Not retained earning. My bad. Book value per share, price earnings, not retained earnings. My bad. Market book / book ratio, dividend yield, and dividend payout. Now, our ROS ratio was 11.2%. Our turnover ratio was 1.4. Our ROA ratio was 16.1%. The leverage ratio was 1.5. The ROE ratio was 24.1%. The free cash flow was $7,384. The working cash ratio was $28,850. The market capitalization was $82. The book value per share was $12.48. The price earnings ratio was 9.7. The book market / book ratio was 2.3. The dividend yield was 0%, and the dividend payout ratio was 0%. Now, when you're looking at these ratios, obviously there's 15 of them. How are we going to be able to know what each of them do? we're going to look into 8 of them and how they affect the ones that specifically affect the company's financial viability. We're going to look into the ROS, the ROA, ROE, the projected stock prices, the market capitalization, the book value per share, price earnings, and the market book ratio. Now, the ROS ratio is an important ratio as it examines the company's profit margins. The ROA is a ratio is important as it examines how a company is working its assets to produce profits. The ROE ratio is important because it looks at an investor's rate of return in which the company can look at as they decide whether to invest in a company or not. The projected stock prices ratio is important because it gives investors the idea of where the company is at and compares with others as going with the stock trend. You know, when you see like the stock trend either going up or if they're going down, obviously if it's going down, they're not going to buy. So that ratio is important because if you see where it's at, the projected price where it's set to go tomorrow, if it's higher than it is today, yes, people are want to buy because it means the stock's going up. Now, when looking at market capitalization, that ratio is important because it's the value the stock market places on the firm, which again plays into the fact of whether people will invest or not. The book per share ratio is important because it represents the investment per share that stockholders may have in the company, either in directly purchasing the stock or indirectly by retaining profits instead of paying them out in dividends. Now, the price earnings ratio is also important because it's a common measure of how expensive a stock is. The higher the PE ratio, the more the market is willing to pay each dollar for annual earnings. Lastly, the market book ratio is important because it compares the stock price to the book value per share. Now we're going to go into the lessons learned. Now, as you can tell, as I'm recording this very late at night, and I'm hoping this gets in time before the due date, and I hope that you'll please accept this, even though I know I'm butchering it so bad. One thing I learned in this class is that I let my senior project overwhelm me. I let it take over everything, every part of my life, as I got overwhelmed by it, and I let it overwhelm me. That's my bad, and it affected all my classes other than the actual project class. Even though I didn't technically hit my goal. My goal was to raise $10,000. I raised $4,000 in total. But yeah, I just did that presentation yesterday. But I let that overtake me and it affect every part of my classes, my life, my social, everything. Yeah, it was not healthy. And that's one thing I did learn from that, to not let one thing dictate my life. Also, I should have made more effort to communicate with my teammates. As I tried to communicate in the first few weeks, and I just gave up after that until we finally realized we need to communicate, and we finally got together. Once they finally got their information pushed hard enough, once I got further in my project where I felt comfortable to like not stop my project, but to like try to balance my work. But I noticed by then it was like week 5, week 6. By then it was very late, as like I said, a lot of the stuff was done. A lot of our project was being done by different people, but no communication. So we couldn't tell what we were doing, and some of us were confused of what we were doing, and we didn't want to. Some of us, if you notice, in myself, I didn't make a lot of decisions was because I was afraid of messing up. As we weren't communicating, I didn't want to mess with, if we were doing well, how we were going about it. And again, it's my fault because I did not communicate very well. Once I did get people communicating, I set up the group chat. I should have made more of an effort to keep the people together instead of being divided. That's the reason why our company fell into debt. I take responsibility on that for my part. Also, about it, I also should have read the textbook a lot more carefully with it. As like I said, as I let the project overwhelm me, I also let it affect how I was retaining information and everything. Also need to learn to need to work on my time management, as you could tell by this assignment right now being turned in. It looks like it may be on time, but I don't know. Once all the editing and everything is done, it might be overdue. I pray that as I need. Sorry. I hope that you will help me and hope this class doesn't keep me from graduating because I'm set to graduate after I finish this class because I passed my senior project and my investment class. I hope that I didn't screw up too badly that I won't get to graduate. Um, Thank you. Hope you have a great day.